historically when Bitcoin range trades like it did last summer before the election, when it breaks out of that range, there tend to be a lot of shorts that have built up and it just tends to go. So I'm expecting a lot bigger move than what's already happened in July. I think people are going to be surprised at the levels that we hit before the end of this month.
What's going on, guys? Today we've got an amazing episode with Jordi Visser. Jordi is a 30-year Wall Street expert, and he is here to explain why is Bitcoin breaking out? How did he know it was going to happen? Whether he thinks Bitcoin's going to go sideways or go much, much higher. And then on top of that, he also talks about stocks, what's going on with tariffs, how to think about the big, beautiful bill, and of course, AI. Where exactly is all the value going there? Jordi is a wealth of knowledge. This conversation gets into all kinds of nuances that I didn't know, and so I learned a lot, and I hope that you do as well. Here's my latest conversation with Jordi Visser. All right, Jordi, all-time highs. S&P all-time high, NASDAQ all-time high, gold all-time high, and Bitcoin all-time high. You called it. Why is Bitcoin breaking out? Let's start there. You previously talked about a short squeeze. You talked about people wanting this decentralized digital asset. What is driving Bitcoin to these higher prices?
Well, I think there's two things that have gone on. One thing we talked about, which I'm going to keep emphasizing to people, once options expiration passed, I think a lot of the supply in Bitcoin started to wear off. I think people are going to have to just start recognizing that at the end of every quarter, there is a lot of open interest from people that are selling future production. I think the Bitcoin miners, from what I've seen, have done it. And I think there's a lot of people that just have joined on the party. And so vol was compressed. You got Bitcoin implied vols below 40. So I think once we came out of expiration, there was less sell pressure. There were a lot of shorts that had built up in the 110 to 120 area around the all-time highs or the prior all-time highs. So I think that started. But there's something big that's happened. And I think you and I, because we didn't do one last week, the momentum is growing from the traditional finance community, and I can feel it. I think Circle was a bigger event and may have been truly, as Tom Lee said this week, the ChatGPT moment for the crypto world, and specifically this situation that Circle made people do research. I think one of the things that I have noticed when I talk to people that I've known for a long time in the hedge fund industry, they haven't put in the time. And you and I have talked about this. Like, if you don't put in the time to understand this, and I was on a call this week with Chris Camillo, and he was saying the same thing about humanoids. It's basically, if you don't put the time in, I don't think you can fully understand what's going on with crypto. And so Circle put a spotlight that, hey, we got to be participating in these IPOs. There's been a bunch of successful SPACs. There's been a whole bunch of things that have gone on. I think we need to do some research. And I think the research has helped. One other thing that's gone on, when Tom Lee, while we were gone, basically started the Ethereum corporate treasury balance sheet strategy. And he explained why this fits into the network effects that I always thought were going to happen from stablecoins. So I think if you take stablecoins, Circle happens, people need to do more research. Then they start realizing, oh, we've got this whole digital oil thing underneath it, and the platforms are going to benefit from the volumes and the transactions, and the network effects lead to Ethereum. And I said to you a couple weeks ago that the technical breakout would be if Ethereum closed 2 weeks above 2,700. Well, now we hit 3,000 today. So I think the altcoin season is starting to enter into people's minds again. So I think it was just a triggering of events that Circle helped a lot as an expiration.
When you look at the expiration component, right? So you get some of that dampening of volatility that goes away. You now have Bitcoin allowed to do Bitcoin things. It starts to really kind of run. And I think that one of the aspects that usually catches people offhand if they are experiencing this for the first time is like when Bitcoin moves, it really moves. And what we've seen over the last even 48, 72 hours is Bitcoin pretty much went from 108,000 to 118,000. I mean, that is not just a direction of move, but that's the severity of a move. You just don't see that often for a multi-trillion-dollar asset. And so how much of that is kind of normal market stuff versus could it just be like one or two big buyers coming in the market and saying, hey, I'm a sovereign wealth fund. I need to buy a bunch of Bitcoin. It feels like we're too big now for it to be any one buyer. And this is much more a market driven thing, which to me means that we probably are in true price discovery. And there probably is, significant momentum that is behind this, kind of going through the rest of this year.
So here's one of the things as a derivatives geek who was born in the options market, this move has not, it's been fast, but as you said, you're getting like 3% moves a day. So Bitcoin's been trading at, or the implied vol is just under 40. Just under 40 implies about, almost a 2.5% move a day. So when you're getting 3% moves, these are really one standard deviation, slightly over one standard deviation move. So I think people have to start to get used to that just because it happens in 3 days, that is the way a lot of stocks move. That's the way a lot of other trillion plus assets move. NVIDIA's move like that. NVIDIA went from a low of 80 back up to 160. It's a $4 trillion asset. It's bigger than Bitcoin. And so its vol is higher than Bitcoin. It doubled. Bitcoin didn't double from the lows back during, Liberation Day after effects. So I think people just have to start adjusting to the fact that the vols move lower. And I think the moves are probably more likely to happen like this just because there's a tremendous amount of option volume that is out there and open interest, much, much more so and growing because of IBIT. And I think this is going to continue. So I think this was a normal move, and I think people should just get used to it. And you know this better than anyone. Historically, when Bitcoin range trades like it did last summer before the election, when it breaks out of that range, there tend to be a lot of shorts that have built up and it just tends to go. So I'm expecting a lot bigger move than what's already happened in July. I think people are going to be surprised at the levels that we hit before the end of this month.
And so you think that this is still short term, kind of from a momentum standpoint. Do you have any sort of indicators? We're sitting around, 118,000. Is this like a 125, or do you think like we could hit like 150 in the month of July?
So obviously some of it's going to depend on if the stock market can just hold its gains at this point. But I have some other signals, and I'm going to be talking about this in greater detail over the weekend. But Global M2 has gone sharply higher. So Bitcoin has kind of underperformed what would be normal. And just to give you an idea, now a lot of this is because of the dollar weakening. But again, the dollar weakening is good for global growth. It's good for assets. It's good for liquidity. So far this year, global M2 using China, Europe, and the US is up over $5 trillion. In 2020, it was up $11 trillion. So I think there's a lot of pent-up liquidity that people have kind of ignored because the stock market had gone down. I've been, all over my belief this year, and I still believe it. And I'll segue into something that I think is important from the economic side on the back of the PMIs, or on the back of liquidity, which usually leads to alts starting to outperform Bitcoin, which is, I think, what we're starting to enter into. You get this point with global M2 that you should have had Bitcoin up higher already this year. So I think there's, we range trade, we're going to extend this move. I still think there's going to be a very large short covering squeeze this year. If anything were to come out positive out of Washington at this point, when momentum is going, I think it's going to add to it, meaning any kind of positive news on the Clarity Act, anything along those lines. I just think now we're in the phase where you have more traditional finance people looking at it. But remember, the Mag 7 are unchanged for the year. So this transition that I think is going to happen away from software technology winners and into more of the AI trade that is relative to construction, infrastructure, commodities. This fits into the PMI. And this is the other thing that Bitcoin, but in particular, the alts have historically had a high correlation with, is when PMIs around the globe start going higher. That is the surprise that I think is going to happen in the second half of the year. I see signs of it in the equity market that it's starting. I think this is going to be a very, very dramatic momentum shift where people are going to start to realize that Bitcoin is not the Mag 7. It's actually benefiting from not only liquidity, but from global growth.
Now, one of the aspects of Bitcoin that I think really is underrated, I think I told you previously, there's a very well-known macro hedge fund. I was talking to the CIO, and he said to me, I come in, I look at global liquidity first, I look at Bitcoin's price second, and then I go look at all my other, kind of data points every single morning. Bitcoin moving higher I think will drive immense amount of optimism and kind of capital flows into other assets as well. How do you think that occurs? Are you hearing anything from some of these other kind of professional investors? It does feel like as crypto becomes more and more of kind of in their realm or in their analysis, that optimism that I think Bitcoin has really benefited from and embraced over the years, that seeps into the stock market. And, in a weird way, Bitcoin moving like this may actually just say, hey, the stock market's next.
Yeah. So the person you're speaking to is very unique, meaning if they're actually watching Bitcoin and using it as a signal, I think everyone else is using it as a speculative vehicle in terms of the way they think about it. So for most macro places, they're more interested in shorting it when it's time for it to go down. You have a few people like Paul Tudor Jones that have focused on it from an inflation and from a spending perspective. If you went through the list of things that have happened this year, we went from, oh, we're going to be an austerity believing administration to we're going to grow our way out of it. If you go through the Stable Coin Act, if you go through the success of Circle, if you go through the ability for Bitcoin to distance itself from stocks during the Liberation Day and actually get back to the all-time highs way before the stocks did, I think this year has been one where Bitcoin has started to, I want to say, force anyone who doubts it. And as someone who spent the beginning part of the year really talking to a lot of hedge funds around the globe, I mean, some people didn't even want to hear it. They didn't want to talk about it. I'm telling you, I'm getting reach out, and I had one yesterday on why Ethereum over Bitcoin right now. And it's not that I believe Ethereum is long term a better investment than Bitcoin, but sometimes when you reach points where, again, if the PMI is going higher, historically the alts have done better than Bitcoin because this is a growth thing. This is an ecosystem thing. I think the problem is for what's going on is like a snowball effect. I think more and more people are realizing that it's an asset that is big enough for them to make money on. They're maybe having trouble making money on the AI trade the way they traditionally do. So I think Bitcoin is now going to be associated with the commodity side more so than people realize. And I think we are in the early stages of a structural bull market related to building out the infrastructure of AI, which is going to take power, as we've talked about. It's going to take copper. I wrote a copper piece this week. I think people have doubted the structural nature of AI, and what the tariff situation did was force us into a position where it is absolutely structural, and I think more people are looking for ways to play it. And I'll say it again and again, the purest AI trade is Bitcoin.
When we look in the stock market kind of intersecting with crypto, we've obviously seen all these treasury companies announced, but also we saw CoreWeave and Core Scientific announce a deal. What was your takeaway from that?
Yeah, so that fits in again. So if I think of stablecoins as the bridge between the fiat money system and the crypto money system, if I think about CoreWeave and Core Scientific, I think about this as the power side of the fiat system, which has been the AI and the power and energy needs of crypto. These are all related to the digital economy. And so I think this is just another spotlight to people of why are they doing this with Core Scientific, and are there other miners out there that we can go look in? How does this fit into the power needs? The more they drill down in this, I think they're going to recognize that there is a linkage again between AI and back over into crypto. And you and I have talked about it. AI agents means higher volumes and means higher transactions with stablecoins. CoreWeave, focused on the compute side and the power side. Here we go. We've got another one that comes over from the AI side. So I think it's just another connection between the fiat system and the AI world and back into crypto.
Can you describe a little bit more detail about PMI data and the China trade deal? I think those two things are somewhat linked here in terms of like, why are those two things important? And then what specifically about what's happening in either bucket is kind of leading to this conclusion?
There's no doubt in my mind that the China-U.S. trade war, and you have to remember back when we went to the 10% across the tariff sweep, when we backed off and then immediately put China up to 100+%, and the goal was to isolate the China from the rest of the world. And now we've gone completely flipped the other direction. There's a deal with the UK. And somehow within everything that's happening now, the China-US situation is fine. And I'll keep saying it over and over again. I think the two countries realize they need each other for the next 5 years. and I say the next 5 years because the U.S. has to figure out its rare earth problem. China wants they want semiconductors and they want chips and they want software, and you're seeing lessons of bans. The commentary coming out of the White House seems to be negative towards every country in the world right now except for China. And so I think what that has done, China is the most important country in the whole trade situation. We all know in the US that made in China is a story that most small businesses depend a lot on the supply chain of China. And so when China tariffs were going in, the business uncertainty took off. Where the PMI fits in is if China and the US have now set and we have full expectation of what's going to happen, then I think the PMIs are going to go higher because of that certainty. But most importantly, we've had a lot of changes since Liberation Day that I don't think people have fully looked at. First of all, new orders in the PMI was already going higher after the election. Most people thought it was happening because of the front loading of stuff before the tariffs, and I'm sure some of that had an impact. But people can't forget that this was a pro-business expectation coming into the year when he took over. Well, now the tariffs are lessened from where they were, and now the big, beautiful bill is done. The China-US situation seems to be at a stalemate where they realize they have to be together. But most importantly, we've had a recognition that AIs move faster than we all expected. It is now a structural race against China, but also for the hyperscalers to avoid obsolescence. The build out for that is much bigger. The nuclear EO was signed, surprisingly, with 3 times the nuclear energy that we're going to need, 3 times the nuclear energy. Everyone has seen the electricity numbers in the US. The build out of power and data centers is going to be a driving force. And so I think the PMI data for all of those reasons is going to go higher. And at the same time, China realizes they have to focus domestically on their economy. There's more speculation that they're going to announce more measures on the property side. All of this leads in when you combine it with what copper is doing, which is at all-time highs. The Kospi is at all-time highs. The dollar's weakened significantly. These are all pro-PMI things. And so I think you're going to see the PMIs rally in the second half of the year. And it's not the way people are positioned.
One of the things I think people are paying attention to, which is important in the media, is there's a Bloomberg article that talks about this rotation in the stock market. I know you've been paying attention to this. Maybe talk about what you would expect to see in these kind of momentum-driven rotations, and then what are we actually seeing and what that means. Today's episode is sponsored by Figure, the largest non-bank home equity lender in the United States with over $15 billion unlocked on their lending platform. They are now in the crypto-backed loan space, and they offer industry-low interest rates when you use your Bitcoin as collateral to get cash. You can access interest rates starting at 9.9%, the lowest fixed rate in the industry at 50% LTVs. Whether you're funding a major purchase like a down payment on a home, investing in new opportunities, or even buying more Bitcoin, Figure makes it straightforward and transparent. You can go to figure.com/pomp or click on my link below to take a Bitcoin-backed loan with Figure today. I'm an investor in the company, and I have spent a lot of time trying to understand this product. And so go visit figure.com/pomp to better understand exactly what they're doing and how these rates work. You can go to figure.com/pomp today. Today's episode is brought to you by Bitcoin IRA. Are you a crypto investor with a retirement account but don't have any crypto in your retirement account? Listen up, this is for you. Bitcoin IRA is revolutionizing the way Americans save for retirement by helping smart investors diversify their savings with access to over 75 cryptocurrencies. With world-class customer service, military-grade encryption, and a vertically integrated licensed trust company, it's no wonder more than 200,000 Americans trust Bitcoin IRA to secure their financial future. Get started. It is quick and easy. It takes just 3 minutes to open an account. Once you're set up, their team of IRA specialists will reach out to guide you through every step of the process. Whether you're transferring an IRA from a legacy bank, rolling over an old 401k, or starting fresh with a new contribution, the Bitcoin IRA team is here to help you get access to real crypto in your retirement account. And here is the best part. As a Pomp podcast listener, you can earn up to $1,000 in rewards when you add funds to your account before tax day. Search for Bitcoin IRA in the App Store or visit bitcoinira.com/pomp to join 200,000 Americans on their journey to upgrade their retirement. That's bitcoinira.com/pomp to upgrade your retirement today. Maybe talk about what you would expect to see in these kind of momentum-driven rotations, and then what are we actually seeing and what that means.
Yeah, it's a good point, and there's a lot. If you go on X, there's a lot of people highlighting, and they're doing it for bearish reasons because this started in December of last year. We started seeing momentum weaken. And just so for the people that don't follow the stock market that closely, think of momentum as taking the top 10% of the best performing stocks relative to the bottom 10% as an index. So you're really talking about the winners versus the losers. And sometimes when that's moving dramatically, where the losers just keep losing and the winners keep on winning, you end up having this massive move in momentum. And obviously, AI has been the dominant impact to the long side of momentum. And that is where things had been driven. So back in December, we started to see a shaking of momentum. It led to more weakness when the DeepSeek announcement happened in January. And by that point, NVIDIA had traded to, 113. It had been up at the highs close to 160. So you really had this fall off and everyone was bailing out of the AI trade. And that led to a lot of hedge fund liquidations. So a lot of people are associating that when you have momentum changes, that's usually a bearish thing, or it was the last time. So it probably means the same thing is going to happen because it seems to be happening at the same time as the tariffs coming back on. I think there's a massive difference right now. I think the AI trade is structural. Semis are doing extremely well. NVIDIA is going higher. NVIDIA had peaked in June, so that was already a weakening trade that was out there. I don't think there's any doubt in people's minds. What I think is happening is that a lot of the losers have been related to the PMI. The PMI has traded below 50 for almost 3 years now, the longest period in history. It only posted 2 months above 50, and that was in the months beginning of the year when the Trump enthusiasm was in there and the front loading was in. So to stay below for that line, that's historically a recession period. The LEI has been in recession land, and so the fact that we've been sitting there means a lot of companies like material stocks, bank stocks, energy stocks. There's a lot of companies that are more on the value side. I think we're getting a shift right now because the software names to me are exposed. I think they're overvalued relative to the likelihood of the disruption that'll come from AI. So I think we're going to see a momentum shift. Now, historically, that momentum shift where momentum starts to break down, that's usually an inflection point involving the PMIs, and it's usually a bottom in the PMIs, and that's what feeds back into bottoms in PMIs usually lead to a rally in Bitcoin.
And those rallies, do they then feed back into any of this data, or is Bitcoin kind of the final end of a chain, right? One of the things I always think about is like asset prices either are part of the flywheel or they are kind of the end result. And Bitcoin to me actually feels like it is the final home of capital, which means that it is not coming back out, right? Like most Bitcoiners, both at the institutional level and the individual level are like, I'm buying the Bitcoin, I'm never selling the Bitcoin. So it's like this quote unquote, like Bitcoin is the final home of all capital because that's where it's treated best. Is that a fair way to think about it?
Yeah, Bitcoin and just like, so let me give you the difference between why investors love investing in tech stocks and particularly software and not so much in energy companies. So historically, energy companies are cyclical. And so you get these large corrections and they're very sensitive to macro changes, while software is kind of this consistent earnings thing that unless you get something like 2022, they tend to be better Sharpe ratio assets to invest in. Bitcoin has a little of both. So it has a cyclicality to it, but then it also is an innovation stock. And if you believe that AI is going to accelerate, I think you should be in Bitcoin. I don't think anyone yet is in that mindset. So one of the important things that you're bringing up, and I think where investors are going to start to see a change, it's the reason why I thought a doubling, a move to 250 this year in my mind was something that I thought would happen. I still believe it'll be the second biggest asset in the world at the end of the year, but I have higher beliefs in where it can go because the setup is a little bit scary. Liquidity's already rallied. We haven't gone through. The PMIs to me are bottoming and they're turning up. And that will mean that tech stocks and specifically the Mag 7 will have trouble. So one of the things that could be interesting about this and what I believe is likely to happen, if the Mag 7 are unchanged at the end of the year, it's really, really hard for the S&P to have a big up year because there's such a big weighting in the market. If you add in that all tech stocks, other software names like Palantir, which has had a great run, great company, I could see that be down from here to the rest of the year, not because anything's changed, but just because it got too far in front of itself if there's a move back into the economically sensitive. Now, those weightings are smaller, so you could have a scenario where more stocks are going up Very few are not going up, but the index doesn't move that much. And that means people are going to look for something that's still moving that has innovation associated with it. And that's where I think Bitcoin should be. That's one of the interesting things about this year is we still have government support coming for this. We still have positive news coming. The Circle IPO is not the last one that we'll see. It's not the last enthusiasm that we're going to see in the space. We're just getting the altcoins to break out, but they're still down on the year. So there's a lot of catch up that can happen. That bring a lot more of the day traders and people back into the ecosystem because that actually serves, as you know, as a big rallying cry for the crypto community to get more involved and get more enthusiastic. But I think you have the traditional finance crowd that's coming in, and I can envision a scenario where the economy PMIs are going up and the Fed is cutting rates. And that's what I expect to happen in the second half of the year. I can't think of a more powerful situation for Bitcoin than a weaker dollar that's already happened, liquidity that's already gone higher, positive stuff from the government, and then the Fed joining the party while the PMIs are going up. And I think that's the baseline. I don't think that's an out of reach forecast.
So the US dollar down 10% or more, start the year, worst start 50 years. There are these charts that I've seen. There's an ascending channel, not a TA guy, but that's what they call it, where the dollar has now hit kind of the lower band, if you will. And I don't know. I'm not Albert Einstein, but if I see it hit the bottom of the channel, the thought process is it goes back up, and on a relative basis, the dollar index strengthens. Like, is that possible? It feels like everyone is convinced it's going to be weaker and weaker, but then you see something like that and you say, well, wait a second, maybe the fact that everyone is thinking that it's going to be weaker and weaker, could it actually reverse and kind of rip higher?
So I think there's likely to be a bounce, but I think the dollar is in a longer term structural trend. So we fall 10%. It's one of the weakest beginnings. Could I see a rally for the rest of the year of 3-4%? Theoretically, I could. I'm not going to say it's going to happen, and the reason is because there's not a day that doesn't go by that Donald Trump doesn't attack Fed Chair Powell. I don't see how this works out well in the fact that they seem to have a goal here to move rates lower in the face of stronger growth. And so we'll see how the market handles that. But if the Mag 7 aren't performing well, I'm not really sure that that helps also on the dollar inflow story. There's another part about this that people have to remember. Depending on which dollar index you use, some of these, like the DXY, which is probably the one that you saw, that's heavily weighted towards Europe. That's not a trade-weighted dollar. The Asian currencies are far more important, and a lot of those currencies are not changing direction. The yen has. The Chinese yuan hasn't really moved this year. That'll be a more important part. But the Taiwanese dollar, which had a significant rally, has continued to be there. A lot of the currencies over there have. We haven't yet seen a move in the Australian currencies. If I'm right about the PMIs and we actually see commodities be stronger, well, that would be good for emerging market currencies. It would be good for South Africa. It would be good for Canada. It would be good. There's a lot of places in their currencies that typically do better when commodities rally. So if I had to guess, I think the dollar is going to end not too far away from where it is, meaning I think we've had the bigger part of this move and we can wait till next year. But I do think U.S. growth is going to be stable for the rest of the year.
Do you think we'll get a shadow Fed president? And does that matter? Or shadow Fed chairman?
I think it does matter because, this is the thing that Donald Trump has to do. He gave in on the austerity measures, but what people have to remember, the austerity measures were meant to help the middle class. It was meant to help the manufacturing sector. We still have a major problem in the country, and it's a voting bloc that's really important. We talked about what happened in New York City. I don't think it can be minimized as to the problem we have with the 25 to 35-year-old, and let's say 21 to 35-year-old voting bloc in this country, which is a growing voting bloc. They have student debt and they can't afford housing. So he has to find a way to help that. And one of the important ways to help that is to lower interest rates, even lower than maybe theoretically where they should be. And I think that the shadow president thing is going to fit in with changes that are going to happen on the housing affordability side, because I'm not really sure long-term yields are going to come down if they start cutting rates. I think it'll end up being a steepening of the yield curve, and rates will still on the back end remain higher, which means he's got to find some way to help the housing market all of these things lead to more printing, in my opinion. They're not going to be QE, but it's some form of helping the median voter. And if you're helping the median voter and you're helping the wealthy through the stock market going higher and you're helping the commodity sector, that just spells a lot of we're going to try and grow our way out of it and get more revenues on the tariff side. I think the shadow Fed thing is going to be a part of a bigger plan to get rates lower and help the housing market and the student debt market.
Do you think that the economic policy that this administration ran on at part of their campaign, they failed? Or do you think that this is a natural evolution of they did something, they tried to implement it, the market reacted, and so you have to change your mind? It's like it's a sign of intelligence, right? I see a lot of people saying, hey, they said they were going to balance the budget. They're not doing that, quote unquote, they failed. On the other hand, I think that it looks like they were trying to do the austerity measures, bond market, a bunch of these guys all freaked out, and then they're kind of changing their mind. Like, how do you evaluate, that transition?
I mean, I'll just use an example of let's just take Meta as a company. I mean, their name is Meta. They changed their name to Metaverse. That hasn't worked out. They fired all the people in that area or closed that whole area. And then they pivoted towards AI. And the company went from a $350 billion market cap at the lows in 2022 to a peak at $2 trillion. I think everything in business, everything in running a sports team, everything in life is you make the best decision on a probabilistic basis that you think will work. When it doesn't work and you find out things that you didn't know, in the case of this administration, I have 100% belief that they underestimated the need and the situation with rare earths. I will say it over and over again. I think Luke Roman has been on this as well. The Israel-Iran situation and the fact that at some point the reporting started to get in that the weaponry was getting harder and harder to come by and that we need to make a lot of new weapons. I think rare earth is a major, major story that very few people have spent the time on. So I think the administration tried to do something. They're still going with some of the plan, but I do think they pivoted on the other option. The one thing that when you and I first started to do the show that I felt very comfortable saying was you cannot cause a recession if you're trying to work your way out of a deficit. That'll lead to more spending for sure. In this case, what they're trying to do is grow their way out of it. And someone asked me yesterday if I thought it was a good idea from a non-political person. And I said, I actually think at this point, it is the only way to get out of this. I don't know whether it'll work or not, but I do think that there is a probability that 5 years from now, the benefits of AI will help the deficit. And so if I was trying to do something, I think taking the Ray Dalio cut expenses and do all this stuff to get it out, what Freeberg says on the All In podcast, I don't agree with right now. And I see the math and I understand how relentlessly impossible it is to think this will happen. But I do believe the productivity gains that are going to come from AI, the productivity gains that are coming from humanoids will help the deficit. I think there's other problems that'll come out of that related to labor and how that all works itself out as a possibility. But I think the choice that they've made at this point, in my opinion, is really the only one. I don't think the way our government works and the constituents electing in people that they want to spend, no matter what they think at the aggregate level, I think they just ran into a buzzsaw and there's just no way to get the US government to stop spending money. So let's try to grow our way out of it and let's figure out a way to do it in a way that makes sense related to AI.
So we've got the big, beautiful bill. All of a sudden, though, tariffs are back. It seems like we're getting some like random announcements and letters of some high tariff rates. What is going on? Is this for sport? Is this for some other purpose?
I literally think he's in negotiations with every country still trying to get the best deal. Do I think he wants as many tariff dollars as he can get without hurting the economy? Yes, because I think at the end of the day, when we look at the deficit, even though the revenues associated with the tariffs are not included in, the numbers that you see in the paper, I do think the ability of getting the tariff dollars in because what the US is giving up and what other countries have benefited from, I think there's a reality in this situation that we're going to end up in a place where the tariffs will find a level, whether it's, 10% across the board or whether it ends up at 17%. I don't think this is going to hurt the economy to the level that people did. And you've been on this all year, and I really did join you in this. So I didn't expect to be there. So what I got wrong this year is I fully expected, even without the tariffs, that the inflation data was going to start to tick higher. It not only has not ticked higher, but that code to, putting today's rents in with it and just showing that we're down at that level, and then watching every economist, all 73, be above where we got the numbers in for May. I just think the inflation data is the benefit that is coming. And this is one thing I want to say to everyone. AI has an impact on the service side of inflation down the road. And if we're already seeing an inflation situation that is remaining sub 2%, which is where we are in some measurements with this, or just above 2%, for the amount of money we printed, for the type of nominal GDP growth that we're having, to even believe inflation could be at these levels is just, it says with AI, we're going to be in a situation, whether it's 5 years from now, whether it's 4 years from now, that inflation is going to be the biggest surprise to people. And I think that's the benefit that's come out. So I'm a big believer that on both what we had to do and what the tariffs are doing. I think this is all negotiation. And I think we're going to come out of this with an economy that's fine, with AI that's powering through in a structural trade. And I think some of the benefits that we are all hoping to see, we are going to see. And I think the middle part of the country is actually going to see some benefits over time. I just think it's not working out for them as much as the White House had hoped at the beginning of the year.
Is there anything that you're worried about right now through the end of the year? I'm pretty bullish through, at least the end of the year. It sounds like you are as well. Anything that you're like, hey, this could derail the train?
Are you looking for a simple way to earn Bitcoin rewards every single day? At Simple Mining, we help people mine Bitcoin, even if you're brand new. We're a vertically integrated Bitcoin mining company based in Cedar Falls, Iowa, offering a premium white glove hosting service that helps you maximize your mining profitability. With over 500 clients worldwide, we manage over 15,000 machines across our sites. Our facilities are staffed 7 days a week, and we fix most on-site issues in under 48 hours. In fact, we can repair more than 2,000 hash boards each month in our dedicated repair center, ensuring your miners run smoothly. Want to see it firsthand? Tour our mining sites, either in person or online, anytime. Plus, for your first year of mining, we cover all repairs, no questions asked. We bill you for the exact time your miners are running, and you can pause whenever you want. Need to buy or sell? Our exclusive miner marketplace gives you the freedom to trade on your schedule. You'll even have a custom dashboard to track your miner stats in real time, and if you're thinking about running your operation like a business, our tax team can guide you through the depreciation advantages. Ready to grow your Bitcoin stack? Visit simplemining.io.
Today's episode is brought to you by Core. You can earn yield on your Bitcoin by just holding your Bitcoin. It's simple. Core, the leading Bitcoin scaling solution, will reward you for not selling your Bitcoin. It's not magic. Here's how it works. Core is a protocol secured by elected validators. You can help elect validators and secure the network by simply locking up your Bitcoin on the Bitcoin blockchain. No bridging, no lending, and just holding. When your validator secures Core, it earns rewards fueled by network activity and passes them back to you as yield. With a minimum lockup of just 1 day, when the time lock ends, you get your Bitcoin back untouched. Still your keys, still your coins, now your yield. For even higher rates, stake Core alongside your Bitcoin and multiply your yield. And if you want to see what your Bitcoin is securing, join millions of others in exploring the largest Bitcoin DeFi ecosystem. There are over 100 live apps in the network and the deepest liquidity in all of Bitcoin DeFi. Get off zero and start earning yield on even just 1% of your Bitcoin by going to stake.coredao.org/pomp. Again, that's stake.coredao.org/pomp, or go click the link in the description. Is there anything that you're worried about right now through the end of the year? I'm pretty bullish through, at least the end of the year. It sounds like you are as well. Anything that you're like, hey, this could derail the train?
There's always something that we're not thinking about that could happen. I mean, the situation with Russia, Ukraine doesn't seem to be improving, although it's been going on for a long time. Trump seems pretty frustrated by it. It was a campaign promise he made. I think there's always something that could happen out of there. If the China-U.S. trade talks break down and the US says we think we can get our own rare earth, or they come up with some reason that I just don't think is possible. Maybe I'm reading that wrong, and that would definitely derail us. I'm not worried about the economy. I'm not worried about job losses. What I am worried about, let's say a year from now, is the power situation. So I'll keep saying it again and again. I think all investors should be looking at energy companies and looking at power over the, I think it happened late last week or early this week. I don't know if you saw this. Uh, Elon Musk is importing a power plant. So if you didn't see this news, you have to go read about it. He literally, to get around the restrictions, this is why the man has been so successful in creating everything. He couldn't get around the permit restrictions to help with his Colossus, the next phase of the build out. So he bought and is importing a power plant. So I don't know what that means completely, but that just says again that we have a serious power situation that is going to be an impact. We are going to run out of power. We are going to have blackouts. We are going to have higher electricity prices. We have to focus on this, and the big, beautiful bill does not help it. And so I think that was a big mistake, and that would be the risk that I worry about the most, is that people are underestimating the needs on the commodity side, and specifically the power side. And by the way, for people, the copper tariffs, which were announced this week, there's a copper problem that's going to be happening too. Copper is an incredibly needed part of the electrification story, and the fact that copper is kind of in this weird place now where we've got 50% tariffs on this, and we need a lot of it and we don't have enough of it, and there's all kinds of supply problems. I think there's a potential story there that maybe we're overplaying our hand or not thinking far enough ahead. So power and copper and electrification and rare earths seem to be the issue to me.
I actually do have one more question. Grok 4 came out. Elon, cold start, behind the curve. Other people had years kind of jump start on him. He's got the best model in the world right now. I mean, just seems incredible.
Yeah. Whatever people think about Elon Musk and the issues that have come out, where would the world be without him in terms of the companies he's built, the SpaceX? I mean, I'm just about to have Starlink put into my home here in Maine. I drive a Tesla. Like, he's impacted my life for sure, the same way Steve Jobs did. And I think the robo taxis and the humanoids and everything that's coming, space travel to Mars, you really can't ever underestimate him. So the Grok situation, and I use Grok every single day, not as my primary tool, but certainly for a lot of different things. But I have been using it more and more this week because the speed of it is it's dramatically faster. And for those people, I was on a call this morning with an investor, and they're in the space of industrials and power. And we talked a lot about Colossus. And I asked him the question, have you ever gone through what he actually did to get that done? A lot of people don't even know what Colossus is. Everyone who's a curious person should just go into Grok and say, what can you tell me about Colossus? And then go listen to a podcast with Jensen Huang and literally hear him say, we didn't think it was possible to put together that many GPUs. We thought it was done, and I think the number was like 32,000, and he was able to do 100,000. No one thought it was possible, and he did it in 122 days. So for him to build Colossus, which is a direct impact to Grok 4 and all this stuff, I think people should never underestimate the things that he says in public about the need for solar, which he chastised the administration post the big beautiful bill about the way they emphasize fossil fuels at the very end and really cut down on the wind and solar, which is obviously not only a necessity, but solar in particular is the end result. So I just think the Grok 4 situation and everything should not be surprising anyone, but it is an amazing tool for people to use.
I completely agree, my friend. Where can we send people to find you on the internet?
They can find me at Substack. They can find me on X. They can find me on YouTube, whether it's VisserLabs, whether it's Jordi Visser, wherever you want to go. And then for the institutional people, I continue to write a lot of deep research and do a lot of AI presentations for the hedge fund community and the private equity community on how they can incorporate it. I'm spending a lot of time now trying to help firms on the culture change, because I think the biggest issue people are having, especially with the young people, is How do we keep the young people engaged with artificial intelligence? How do we inspire them to work for the firm? Management seems to be having a hard time with that. If you want to not be disrupted, if you don't want to be obsolete, you got to have the young people at the firm. They're scared of what AI means to their businesses. The only way to get people to not be scared of something is to teach them how to use it and create a culture which embraces it. I've been helping firms with that as well. So they can find me at all those places, my friend.
Amazing. Thank you so much for doing this. We'll do it again next week.
Thanks, Pomp.